Could the future of Bitcoin be the catalyst that triggers an unprecedented shift in the global economy? Could its impact be so profound, so transformative, that it has the potential to redefine the very essence of wealth, power, and resource distribution? Always Bullish is here to help answer this question. As we delve deeper into the implications of spot Bitcoin ETFs approval, officially solidifying Bitcoin as a real-world asset that has surpassed the market cap of silver and several blue-chip stocks, and is now gunning for the S&P 500 and setting out to dethrone the time-tested asset, gold. Welcome to the brave new world of Bitcoin exchange-traded funds, or ETFs, a game-changing innovation that has, quite literally, taken the crypto universe by storm. To truly appreciate the significance of Bitcoin ETFs, one must first understand what they are and how they operate. Imagine a basket, if you will. This basket isn't filled with fruits or vegetables, but with Bitcoin. An ETF is essentially this basket, a type of investment fund and exchange-traded product, traded on stock exchanges. When you buy shares of a Bitcoin ETF, you're buying pieces of this basket, thus gaining exposure to Bitcoin without actually owning it directly. This is revolutionary. Why? Because it opens up the world of Bitcoin to a much broader audience, including institutional investors who may have been wary of dabbling in cryptocurrencies directly. It's a bridge, a gateway that connects the traditional financial sector with the cutting-edge world of digital currencies. Let's dive deeper into how Bitcoin ETFs work. Bitcoin ETFs track the price of Bitcoin, allowing investors to gain exposure to Bitcoin's price movements without the need to store or secure the digital asset themselves. The fund's managers acquire Bitcoin and create shares that represent a proportional interest in the pool of Bitcoin. These shares are then traded on traditional exchanges, just like stocks. A lot of people don't comprehend just how much of a game changer this is. What this has allowed is for many players to enter the market who were once patiently waiting on the sidelines to gain exposure to Bitcoin without carrying any of the perceived risks associated with the most cryptographically secure digital asset. Risks the average normie tend to believe the asset inherently poses, when in actuality, the true risk is not having any exposure to this valuable commodity whatsoever. Although Bitcoin ETFs provide exposure to the asset, it's important to remember that holding these BTC ETFs is not the same as holding the actual asset in a self-custody or collaborative custody arrangement. Despite this fact, asset managers have to acquire actual Bitcoin in order to offer these Bitcoin ETF products to their clients. At present, both institutional investors and retail investors, as well as speculators and hedge fund managers, are taking an interest in Bitcoin ETFs. However, let's not forget that Bitcoin is still very much in the early adoption phase of its uprising. Now let's talk about market makers, the unsung heroes of the ETF world. They play a crucial role in maintaining liquidity for Bitcoin ETFs. Market makers are firms or individuals that stand ready to buy and sell securities at any time. They do this by maintaining an inventory of securities to meet the market demand. In the case of Bitcoin ETFs, market makers help ensure that the price of the ETF closely tracks the price of Bitcoin, providing a fair and accurate price for investors. Investing in Bitcoin ETFs comes with its own set of risks and rewards. The rewards are clear: exposure to the high potential returns of Bitcoin without the need to manage the digital asset directly. However, the risks can't be ignored. Bitcoin's price is notoriously volatile, and while an ETF structure can help mitigate some of the risks associated with holding Bitcoin directly, such as theft or loss, it can't protect against market volatility. As with any investment, understanding the mechanics is key to making informed decisions. Now that we've peeled back the layers of Bitcoin ETFs, let's move on to the impact they're having on the world of finance and beyond. The impact of Bitcoin ETFs is already palpable. They've proven to be the most successful ETFs in history, drawing in colossal amounts of capital, surpassing even the most optimistic predictions. The demand for Bitcoin ETFs is skyrocketing, promising to drive Bitcoin's price to unprecedented heights. But it's not just about the price. Bitcoin ETFs are also triggering a supply shock. As asset managers continue to buy Bitcoin, the available supply dwindles, creating an upward pressure on the price. It's a fundamental principle of economics. When supply decreases and demand increases, prices rise. The global economic landscape is morphing at a staggering pace, and Bitcoin is at the forefront of this paradigm shift. As we move into this new era, expect to witness significant wealth transfers, power shifts, and disruptions to existing financial, banking, and governance systems. Bitcoin is not just rewriting history, it's crafting a new narrative for the future. A narrative that promises a more equitable distribution of wealth, power, and resources. But this won't happen overnight. It requires foresight, courage, and a willingness to embrace new technologies before they become mainstream. The unfortunate reality is that not everyone is ready to take this evolutionary leap forward into the world of digital transformation. Many will miss out on this once-in-a-lifetime opportunity, but for those who dare to step into the world of Bitcoin, the rewards could be monumental. So as we stand on the precipice of this new era, one question remains: are you ready to be part of the Bitcoin evolution? Because the future of Bitcoin isn't just about digital currencies. It's about a world where power, wealth, and resources are more equitably distributed. A world where the impossible becomes possible. And that world is closer than you might think.